FSN Radio. It's all about what's next. Go to financialsurvivalnetwork.com and sign up for your free weekly newsletter. You'll also get 3 free reports. The Financial Survival Network. It's all about what's next.
Welcome. You are listening to the Financial Survival Network, and I'm Kerry Lutz. Today is January 21st, 2019. Well, there are so many hotspots in the world right now that I don't know how you keep track of it. It's hard for me. And the places that you might think aren't hotspots, well, they could very well turn into hotspots tomorrow. This wave of dissatisfaction, this wave of anger and rebelliousness towards the system, I don't see any end towards it. And you're just going to see more and more. Brexit, yellow vests, you name it. You'll see the movements are starting in Canada. I can feel it here being in Vancouver now. They might be the last ones to go, but they are fed up, the real Canadians. Hey, as always, we urge you to be part of the show. Join the dialogue and email us, kl@kerrylutz.com. Right now, we have Lior Ganz with us, our good friend from wealthresearchgroup.com. Lior, welcome back to the show.
Hey, thanks, Gary.
So, what is going on here in the world? We got the yellow vest thing. It's spread to England and the Brexit vote, and it's spreading all over the place, this yellow vest movement, it seems anyway, doesn't it?
Yeah, definitely. It's you have 10 years of debt-infused growth for the 1%. It's just a giant wealth transfer. So criminal, it goes beyond belief. But like many political leaders have said throughout the centuries, if the lie is so big, it's hard for people to fathom that it's a lie. But that's exactly what it is. Central banks have been concocted through the European bloodlines centuries ago, and they were so fought by the American public and by smart politicians at the beginning of this republic, and presidents have died because of it. But on that Christmas Eve of 1913, it was passed into law, and it's been challenged many times. You can see over the years, even the president who put it into action, Woodrow Wilson, was so regretful on his dying bed about getting the Fed in action. And it is what it is. It's the end of this giant debt cycle, and the average person is the worst loser of this. So when you have 150 million people working in the United States, the largest economic engine in the world currently, to be surpassed by China in a few years, and when they tell you that a 3.8% official unemployment rate, you would think that people will be swimming in dough. No, because 75 million people, half of the working population, Kerry, gets paid $30K a year before taxes. There is no middle class. When you have 15 million people on minimum wage celebrating a $12 an hour increase from an increase to $12 or $15 an hour. This is not what people signed up for. You don't start working at age 20 and at age 65, plugged with all kinds of stress-related diseases, from diabetes to obesity to whatever people get in the Western world, which is happening all the time. And you have no retirement to count on. How can this happen? There is no explanation for the sweat and labor and effort of 45 years of work ending with zero results, other than that the system is rigged against the people.
It's sure beginning to look that way, huh?
You know what? I am fortunate enough to figure it out early. But it is what it is. And I think, and that's the reason I founded Wealth Research 3 years ago, in order to empower people to get financial education as fast as possible, as quick as possible, because the jig is up. And one thing that the elite do not fear is system implosions. And the reason they don't fear it, and you can look back at 2008 as an example, is because for most of the population, they believe that the answer is with the elite. 2008 was the prime example of how a revolution could happen. You could have sent all of these incompetent people to whatever you want. You can. Some people say that they should go to jail. Some people say they should just be fired. Whatever it is, nothing happened, and that shows you the level of ignorance with the average person in the Western world with regards to the fact that there's $21.6 trillion worth of national debt. Heck, people don't know that the federal government pays $1.5 billion a day in interest payments.
I know.
Isn't that insane?
Totally.
And people just don't even know what that is. They don't even. I don't think the average person even knows that the federal government pays interest on its debt. So. Yeah. It's just a very perverted situation, and that is the reason people need to act independently of the herd. Just because the herd is moving in a very rotten direction. When a corporation, any American corporation, doesn't have anything barring it from moving outside and finding a cheap labor country to process its projects or to get the majority of its services from, corporations will keep being profitable like there's no tomorrow, which corporate America is. It's highly profitable, much better than bonds as a long-term investment. And the average person will continue to be the victim of this. Because in America, you can't live like you're in Southeast Asia. It just doesn't work that way. So, people have said, look, if we wouldn't have opened these borders up, if we haven't globalized, then other countries will have these profitable corporations and we would be stuck with low profitability. Well, not true. The U.S. held all these commercial secrets. It should have been able to monetize them instead of just going outside and teaching them to all these countries that now have all these secrets. So protectionism is good when it's necessary, and expanding the borders is good when it's necessary. It was just huge mistakes on the part of former presidents and administrations to allow this to happen, and now you find yourself in a situation where it's very hard to save. So, that's the reason why people have got to just tune out of the regular day-to-day mentality that they have and just change it altogether and figure out how to not be part of statistics. So, it's a long answer, but the end result is that policymakers do not care about the average person. They care about the system and their way of life. And so long as they control money, they control the creation of currency, they're not going to give it up.
Yeah. Well, that's why I've always been skeptical about cryptos and the ability of the not the blockchain itself, but the distribution of the blockchain over the web. I think there are things that can be done to stop it and to manipulate it and make it problematical to maintain cryptos as a store of wealth. But in any event, so we got this anomalous situation where everything you're describing should have been bullish for gold, and yet gold has gone up, slightly since over the past.
I love
month.
That question.
Yeah,
it's a phenomenal question because I get asked that all the time. With a partial shutdown in the federal government, with no resolution to the China deal, with Brexit, with yellow vests, with everything that's going on, with a record one-day stimulus from China, how come gold is not trading at higher levels?
Good question.
Now I have two answers that people need to consider. For one, if you go back to the 1st of January 2000 and take a look at the gold price and take a look at the S&P 500. The gold is up almost 400%, so fivefold since January 1st, 2000. The S&P 500 is up 66%. It hasn't even doubled.
Mm-hmm.
And so we need to really internalize that gold as a long-term investment has been better than corporate America for 18 years. That's huge.
That's remarkable.
Well, imagine, just think about the fact that Warren Buffett has told for decades to people that stocks are better than gold. Well, it's true unless there are particular moments, and we're talking about an 18-year moment, where if Berkshire Hathaway would have took its cash hoard, not its stocks portfolio, but just its cash hoard, and put it into gold, his shareholders and himself being 33% of the ownership of the company would have been much, much richer. So that's one thing important to remember. 1,300 gold is definitely not $250 and not $35 an ounce where it used to be. Now, it does only cover 7% of the currency supply. So in a classical gold standard, the price would be 14 times today's price to cover 100% of the currency supply, as it did briefly in 1980.
Right.
With lower rates of gold standard, which we saw 40% and 20% during the 20th century, still the gold price would be either 6 times what it is today or 3 times what it is today if we go back to the lowest gold standard we saw. Mm-hmm. And so gold is historically, if you look at the cover ratio to currency, it is undervalued. Why isn't it going up further? Well, there are 3 reasons for that. One is education of the public. So gold is not a commodity or a precious metal that has any supply shortage. Every ounce of gold that has ever been mined is above ground, either as jewelry or bar or coin, whatever form it facilitates. The only parameter that determines the price of gold is demand. Mm-hmm. So supply is not the problem. It's only demand. When the public is uneducated about gold, as it is today, with less than 0.85% of global portfolios invested in gold, there's one reason right there. Now, every time there's an event, there are more and more people that understand gold. But when you have the 2 largest populated countries in the world, China and India, that are traditionally very gold oriented, still very poor in general, you will not see gold exploding. Once China and India become the richest or the biggest economies in the world, which will happen in the next 10 years, as both of them will eclipse the United States in size of GDP, you will see higher gold prices. So that's one thing. Secondly, we got to remember how gold prices are set on the COMEX in London and the U.S., both the most important financial hubs of central banking. So there is a clear, everyday agenda to keep a lid on gold and silver. Now, silver, they've done such a good job at it that it's not even considered a precious metal anymore. Really? It's considered an industrial metal with very little. It's just a small investor demand for it, and therefore, when you see that investor demand materializing, it can go from 13 to 49 in like 2 years. What other metal does that? It's so small. So that's the second reason. Silver is not monetized anymore. Nobody thinks about silver as money, though it's been money, for 5,000 years since they dug it out of the ground for the first time. Mm-hmm. And thirdly, and this is the most important thing, gold is trading at all-time highs in 72 different currencies. It's not trading at all-time highs compared to the dollar. And here's the reason. When you are the United States government and you monetize debt by issuing currency via the Federal Reserve and export that money out into foreign holders, you basically export dollar inflation. Mm-hmm. And so the United States is part of only 5 countries in the world that have not suffered runaway hyperinflation in the 20th or 21st century. Only 5 countries have enjoyed that sort of stability. And for the United States, the reason being that they export 50% of the dollars they create into foreign hands. 50% of US dollars are not within US soil and the US banking system, and 71% of the world's currency is dollars. It's a bit less today because of the euro. So you have to understand that this is why, in dollar terms, there is a lid on the price of gold. Now, in the next few years, Gary, this will change as China is limiting its treasury holdings. Russia is liquidating its treasury holdings. Japan doesn't want any more treasury holdings. And in fact, these countries are looking to monetize themselves via the yuan. So they're looking to expand into having more Chinese debt than U.S. debt. And so the U.S. to fund $1 trillion yearly deficits, which it must, because you're definitely not going to tell a quarter of the population that their Social Security is in hazard, or that their Medicare and Medicaid are not coming. You're certainly not going to cut defense when you're on the run here, playing against China and Russia and other countries that you just have to defend yourself from. And you're not going to cut on, important stuff like education and income security and everything like that, because you're going to have some very nasty problems on your hands. So these things are not going to be cut. Recession or not, tax cuts or not, tax receipts, it doesn't matter. The United States has a funding problem. And when foreign governments decide not to loan it money in the way that they loan it now, you're going to see the United States, for the first time, monetize its currency by actually printing it and not exporting it. And that's when you're going to see higher inflation in the U.S. Because people have been shouting hyperinflation since 2008.
Right.
People are, it's like crying wolf. People don't believe it anymore. So, and you can see that people don't believe it because in order to justify it, they say that the government is falsifying, the way that they measure inflation and all that kind of stuff. But honestly, so I've been in 26 different cities in the U.S. since the Great Recession, and inflation is there, but it's not an epidemic. Life is affordable for the most part. You're not. This is not Venezuela or something where it's a banana republic. The United States is functioning. You can pretty much afford to live in most of U.S. cities, notwithstanding New York, which is not even a U.S. It's a metropolitan. It's just a global hub.
Yeah, certain cities, LA's to San Francisco, forget it. They're insane.
Exactly. Yeah. But like the U.S. hubs that are real hubs of genuine Americans, life is pretty much affordable. It's good. There are many European countries and other countries that are even second world countries that are more expensive to live in. So this is the real game changer. How will the U.S. come the 2020 election and onwards, where a quarter of its population is retiring and there's no sufficient tax receipts to keep continuing to fund this, and with a protectionist agenda instead of a globalist agenda, which means that other countries are not going to be willing to take on that much U.S. debt anymore. How will they keep on doing this? And they will have to print currency and keep that currency domestically, which means more money velocity and much more inflation. Now, I'm not talking about 20, 30% inflation, but in the U.S., if you have 5 to 6% inflation year over year, over a 13, 14, 15-year period, the dollar doesn't even stand a chance at staying the world reserve currency at that point. It's and then you have a crisis on your hands, like currency crisis. So that's for me the most troubling aspect of the global economy. And for people to say gold has not performed well, then I remind you of the two things we've talked about. It grossly outperformed the S&P 500, and it's trading at all-time highs at a third of the world's currencies. So, it just important to understand that gold is an international currency, and if you are an international investor, if you have exposure to real estate in other countries, converting gold to real estate right now in 72 countries is a freaking good idea.
Mm-hmm. Just not in the States right now. Even in Canada,
Correct.
the price of gold is way, way high because the Canadian dollar is hitting new lows. I mean, I'm in Canada now. I converted $100 US, and I got back 136 Canadian, which is the most I've ever gotten, at least in the past 30
It used
years.
to be that far a few years ago.
Yeah. So it's at 75 cents right now. Actually, I was here in the 90s, and it was actually 68 cents to the U.S. dollar. So that's the kind of stuff we have to look forward to. You're telling me, huh? Well, I think the way
the
things
dollar has been the best foreign currency on the planet, Kerry, in
for
2018.
Years. Yeah,
the
for years.
Last time this has happened, where the dollar for a full calendar year was a better currency than stocks and bonds, was 1969. 2 years prior to the worst valuation of the dollar ever. So when you see a calendar year where the dollar is that strong, it's because the Federal Reserve is trying to preserve however it can and tighten however it can monetary policy so that there won't be a run on the dollar. And we'll see what happens, in the next 2-3 years here as this going on. And this is not just me talking. Ray Dalio, arguably the best investor of our times, with a net worth of over $20 billion, and he runs the largest hedge fund in the world. Forget about becoming a client. That client list is closed for the past 10 years. He is saying the exact same thing. He's talking about a 25% currency loss of purchasing power for the dollar within the next 5 years. So it's huge.
It's big. And we haven't seen much because the one inflation measure that I personally follow that I feel is the most reliable, and it's been followed for over 50 years now. Forget about CPI because it's manipulated. Forget about all this other stuff. The one thing that I follow is the Thanksgiving dinner index. And the past 2-3 years, it's been down by a couple of percent. All the other stuff you could keep. The one thing you got to do is you have to have Thanksgiving dinner. 85% of the country celebrates Thanksgiving. So that is a true indicator of what it costs to live. We can look at energy prices. They fluctuated enormously. They were up to almost $4 a gallon in certain places. Now they're down under $2. So we see that you can't really use that as a measure because it's so fluid. But the Thanksgiving dinner, it always works, and it always has. Anyway, Lior, we got to run now. wealthresearchgroup.com. You got some free reports?
Definitely. Look, I think the most important one is to understand why Trump is fighting the Fed right now. If you go to wealthresearchgroup.com/Fed, it's an exclusive report going back to 1913 and how exactly this country was hijacked by a central bank. And I think that's mandatory reading. wealthresearchgroup.com/Fed. Obviously, the best way to stay involved and current with everything that's going on is via subscribing to the free newsletter, and that's where I publish all our top ideas and higher priority data.
All right, excellent. Hey, and any questions or comments? Want to be part of the show? Just write us kl@kerrylutz.com. If you are listening to the show on YouTube or through traditional channels, then please subscribe, like, and share us. Send it to somebody who you think can get something out of this. We got to get the word out. Things are changing quickly, and you need to try to keep up with it and figure out what to do. Hey, the Facebook page is Financial Survival Network, and the Twitter feed is at Kerry Lutz. Hey, Lior, we'll look forward to speaking with you again next month. Thanks for coming on.
Thank you for having me.
FSN Radio. It's all about what's next. Go to financialsurvivalnetwork.com and sign up for your free weekly newsletter. You'll also get 3 free reports. The Financial Survival Network. It's all about what's next.